Good morning and welcome to my office. Let's get started.
While you are sitting down for dinner on a quiet Sunday evening, the most predatory financial ambush of the week is being silently executed. At exactly 6 o'clock Eastern Standard Time, the global futures markets open for trading. Retail investors are completely disconnected, and Wall Street knows it. This is the Sunday night trap. It is a highly coordinated algorithmic operation designed to weaponize low liquidity and steal your wealth before the Monday morning alarm clock even rings. If you have ever woken up on Monday to find your silver or gold positions crushed, you have been a victim here. They do not need breaking news or fundamental economic data to crash the market on a Sunday night. All they need is an engineered vacuum. When the electronic trading platform opens at 6, there are virtually no buyers. The European desks are asleep and the American retail market is entirely offline. In this artificial vacuum, bullion banks deploy high-frequency trading algorithms to dump thousands of naked short contracts onto the market in a matter of seconds. Because there is no natural buying pressure to absorb these massive orders, the price of paper silver instantly cascades downward fast. This sudden violent drop is not meant to reflect the actual value of the physical metal. It is a calculated strike designed specifically to trigger the automated stop-loss orders that retail traders lazily left open when the market closed on Friday afternoon. It is absolute modern financial warfare. When your stop-loss is triggered, your broker automatically sells your position at the market price. This creates a chain reaction. Your forced selling pushes the price even lower, triggering the next level of stop-losses down the chain. The algorithm feeds on this engineered panic, driving prices down. By the time the sun rises on the East Coast and the traditional equity markets prepare to open, the damage is already done. The financial media looks at the overnight charts and broadcasts the narrative that precious metals are weak. They invent post-market excuses to justify the algorithmic theft. You wake up, check your portfolio, and see a sea of red. Human psychology takes over. The artificial drop creates genuine panic among retail investors who assume that smart money must know something terrible. They capitulate and sell their remaining positions right at the exact bottom of the move. And who is waiting at the bottom of that engineered crash to buy your liquidated positions? The exact same bullion banks that initiated the short attack on Sunday night. They cover their short positions at a massive profit and accumulate the underlying contracts at a steeply discounted paper price. This cycle is repeated endlessly. It is a wealth extraction machine that operates in the shadows of the weekend. They rely on the fact that you are sleeping, spending time with your family, and completely ignoring the electronic Globex exchange. Your lack of attention is their primary liquidity pool. To truly understand the brilliance and the malice of this trap, you have to look at the mechanics of the futures exchanges. The COMEX and the LBMA were originally established to provide price stability for industrial producers, but they have been completely hijacked by institutional speculation now. These institutions operate with leverage ratios that would be instantly illegal in any other sector of the economy. They routinely trade hundreds of paper claims for every single ounce of physical silver that actually exists in the registered vaults. It is a fractional reserve bullion scheme today. When you control that much paper leverage, you cannot allow the free market to dictate the price of the underlying asset. If the price of physical silver were allowed to rise organically to reflect the massive global supply deficits, the bullion banks would face unlimited losses on their short books. They are mathematically trapped in their own manipulation. The only way they can maintain solvency is to constantly spoof the market and shake out the weak retail hands. The Sunday night liquidity vacuum is their preferred battlefield because it requires the least amount of capital to move the market. If they tried to dump 20,000 short contracts on a Wednesday afternoon, when London and New York are fully active, the market would easily absorb the liquidity and the price would barely move. The organic demand from industrial users and institutional buyers would act as an impenetrable wall. But on Sunday at 6 in the evening, that wall does not exist. It is an open door for algorithmic terrorism. They can crash the price of silver by a full dollar in less than 3 minutes. They paint the tape with red candles to guarantee that the Monday morning sentiment is entirely shattered. You have to ask yourself why the regulators allow this to happen. The Commodity Futures Trading Commission has the data. They can see the timestamps of these massive anomalous order flows. They know exactly which institutions are initiating the dumps, but the regulatory agencies are fully captured. The revolving door between Wall Street compliance departments and federal regulatory agencies ensures that the architects of the Sunday night trap are never genuinely prosecuted. Occasionally, a bank will be handed a minor fine for spoofing, but it is treated as a minor cost of doing business today. When JP Morgan was fined nearly $1 billion for manipulating the precious metals markets, the media treated it as a victory for retail investors. It was not a victory. While they were manipulating the paper price downward, they were quietly accumulating hundreds of millions of physical ounces. They used the engineered crashes to build the largest private stockpile of physical silver in modern history. They robbed the retail market of its wealth and used the proceeds to secure their own physical dominance. The fine they paid was a tiny fraction of the generational wealth they accumulated. This brings us to the most critical component of the Sunday night trap. The global dynamic has fundamentally shifted. The Western bullion banks are no longer the only predators in the water. The sovereign wealth funds of the East are watching these weekend manipulations, and they are adapting fast. When the COMEX opens on Sunday night in New York, it is Monday morning in Asia. The Shanghai Gold Exchange and the Chinese industrial conglomerates are fully awake and monitoring the tape. They see the Western banks artificially crushing the paper price of the most critical industrial metal on Earth. Instead of panicking like the Western retail investors, the Eastern whales view the Sunday night trap as an absolute gift. They step into the market and aggressively purchase the physical metal at the discounted paper price. They are essentially arbitraging the Western manipulation for their own gain. Every time Wall Street flashes the price down to shake out weak hands, Beijing and New Delhi secure another massive tranche of physical silver for their solar manufacturing and defense industries. The metal is loaded onto transport planes and permanently removed from the Western depository system now. This is the fatal flaw in the bullion bank strategy. Their algorithmic games only work in the paper derivative markets. You cannot spoof the physical supply chain. A solar panel requires actual physical silver conductivity. You cannot build advanced electronics with a digital futures contract receipt. As the East relentlessly drains the physical vaults, the foundation of the paper illusion becomes increasingly unstable. We have endured 5 consecutive years of structural global supply deficits. The world is burning through hundreds of millions of ounces, more than the mining sector can extract today. The above-ground stockpiles that have buffered this deficit for decades are reaching critically low levels. When the registered inventories on the COMEX eventually fall below the functional threshold required to facilitate physical delivery, the Sunday night trap will experience a catastrophic failure. An algorithm cannot cover a short position if the counterparty demands physical delivery and the vault is empty. When this inevitable fracture occurs, the institutions holding unbacked paper contracts will be completely wiped out. The exchange will invoke force majeure and halt all physical deliveries. They will cash settle the outstanding paper contracts using the artificially suppressed closing price of the day. The retail investors holding exchange, traded funds, and unallocated bank accounts will receive a deposit of depreciating fiat currency, while the true price of physical silver gaps up hard. The physical premium in the Eastern markets will immediately disconnect from the Western paper benchmark. We are already seeing the preliminary stages of this decoupling on the Shanghai Exchange, where physical delivery commands a massive premium over the COMEX spot price. The split is happening now. This means you are running out of time to extract your wealth from the blast radius of the paper market collapse. If you wait for the mainstream financial media to explain the mechanics of the Sunday night trap, you will be the exit liquidity. You must position yourself entirely outside the system. The very first action you must take is to completely eliminate your use of stop-loss orders on precious metals positions over the weekend. If you are holding paper instruments, do not give the algorithms a target to hunt. A stop-loss in a manipulated market is simply an invitation to be robbed blind. But the ultimate defense against the Sunday night trap is to completely abandon the paper illusion. You must convert your fiat currency into tangible physical metal that you hold in your own possession. When you own the physical asset, the weekend volatility of the futures market becomes irrelevant. If silver drops $2 on a Sunday night because a bank dumped 20,000 naked short contracts, your physical ounce of silver does not change. Its conductive properties do not degrade. Its historical monetary value remains entirely intact. You are completely immunized against the algorithm. Acquire sovereign minted coins like American Eagles or Canadian Maples. Build a foundation of recognizable bullion bars. Accept the fact that you will pay a premium over the manipulated spot price. That premium is the cost of absolute financial sovereignty in a world built on systemic fraud today. If you are allocating capital on a scale that makes home storage impractical, you must use fully allocated and segregated private vaulting facilities. These facilities must be located outside the traditional banking infrastructure. You must hold direct legal title to specific serial numbered bars. Do not accept unallocated storage where you are essentially an unsecured creditor to a financial institution. If the bank fails or the physical market breaks, your unallocated account will be liquidated to protect the senior bondholders. You must remove all counterparty risk from your portfolio now. You must also understand the macroeconomic forces that guarantee the ultimate failure of the paper suppression scheme. The United States government is currently adding $1 trillion to the national debt every 100 days. The interest expense alone is consuming the entire federal budget fast. The Federal Reserve is trapped in an impossible mathematical paradox. They cannot raise interest rates high enough to stop inflation without bankrupting the Treasury. The only mathematical certainty is that they will be forced to aggressively devalue the currency to manage the unpayable sovereign debt. As the purchasing power of the dollar collapses, the demand for hard assets will reach unprecedented levels. The institutions that have spent decades suppressing the price of gold and silver will be completely overwhelmed by a global sovereign rush to secure physical inflation protection immediately. The smart money is already positioning for this transition. They are quietly accumulating physical tonnage while utilizing the Sunday night trap to discourage retail participation. They want you to believe that precious metals are a volatile and dangerous investment, so you remain in depreciating fiat. They want you trapped in the digital banking system, where your wealth can be slowly siphoned away through the hidden tax of inflation. By stepping out of the fiat paradigm and securing physical assets, you are actively rejecting their control grid. You are taking your power back from the cartel now. Every time the price crashes on a Sunday night, you must train your mind to view it as a systemic failure of their paper illusion rather than a reflection of true value. Use their desperation as your primary accumulation strategy. Buy the physical metal when they engineer the deepest artificial dips. The global monetary reset is not a theoretical future event. It is a slow-motion train wreck that is happening right now across the international commodity exchanges. The frantic manipulation of the Sunday Futures Open is the clearest symptom of a financial system that is structurally compromised. You have the historical context, the mathematical proof, and the knowledge of their algorithmic playbook. The only remaining variable is your willingness to take decisive action. Do not allow your family's financial future to be dictated by high-frequency trading algorithms deployed in the shadows. Secure your physical position, hold the line against the engineered volatility, and prepare for the inevitable moment when the paper market finally breaks under the weight of an empty vault. The greatest wealth transfer in modern history is accelerating, and the physical holders will be the victors. Do not be the investor who wakes up on a Monday morning to find their paper wealth destroyed by an algorithmic ambush. Be the sovereign individual who holds tangible reality outside the reach of the banking cartel. The trap has been exposed. The choice to step out of it is now entirely up to you. We are entering a phase of extreme geopolitical and economic instability. The BRICS nations are expanding their alternative financial architecture to bypass the weaponized dollar system. They are anchoring their new trade mechanisms with physical commodities fundamentally altering global demand. When the global south refuses to accept unbacked paper promises in exchange for their raw materials, the entire Western financial leverage model collapses. The Sunday night trap is nothing more than a desperate delaying tactic by a dying empire trying to maintain the illusion of absolute control. Your physical silver and gold are your lifeboat in this transition. They are the undeniable reality in a sea of digital fiction. Take possession of your wealth today, stand firm against the manipulation, and watch as the mathematical certainty of the physical deficit eventually destroys the trap.